Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that for the most part, ES balanced within a range, and then off of the 7:30 a.m. Central Time economic reports, we're getting a little bit of selling into the 78 quarter to 80 half support area. Now, how the market responds to 78 quarter to 80 half and the 77 quarter high volume node is really going to help set the tone for the day. So that area is being used as the initial support as well as the micro bull bear. If the market breaks below 78 quarter and the 77 quarter high volume node, then that would signal the sellers being more dominant on the smaller time frames, and from there we can test the 71 quarter, 73 quarter zone, filling the gap at the 72.75 level, and possibly even testing the recent low at 66.5 to 68.5. So this area here off the open is going to be pretty important to help set the bias for the day. On the upside, we have resistance at 83 to 85 quarter, which marks yesterday's VPOC and the all-time high. And in order for the market to break out and sustain higher prices, we are going to want to see sustained upside momentum via the NYC tick holding above zero and printing some nice values, as well as some strength on the advanced decline. And of course, we would also want to see participation from the other markets. So far, we've been seeing a lack of participation from TF, and there's been this negative divergence setting up between the Russell and the S&P, and that's been weighing on the S&P. So if Russell continues to head lower, then it's going to be difficult for ES to print new all-time highs and actually maintain and sustain those higher prices. So keep an eye on the Russell off the open as well. And as long as the Russell isn't selling off and at least stabilizes and starts heading back up, then ES can stabilize as well. We already know that the Russell is relatively weak compared to the S&P, so we don't necessarily have to see TF rallying right off the open, but at least there should be some stability in that market. And if it continues to sell off, then it's going to make it very difficult for ES to go higher. On the upside, in the event of a breakout above 83 to 85 quarter, we can quite easily tag the 88 half to 90 half zone. But also keep in mind that beyond 85 quarter, there is no hard resistance. So at that point, it's really all about the range potential of the day. And we know that these days the market is running on very light volume and low volatility. So even 88 half to 90 half would be a pretty decent upside objective. Beyond that, the range would be getting quite exhausted by 93.75 to 95.75, and it's very unlikely that we will go beyond the 93.75 to 95.75 zone. Even reaching that area seems unlikely at this point in time because of the low volume. But in the event volume picks up a little bit or we start getting some better momentum, 93.75 to 95.75 would be an area that could cap the upside. On the downside, below 71 quarter, 73 quarter, the 66 half to 68 half is still a spot that can attract responsive buyers, and you would also be exhausting the range by that point. So that area can still hold, and in the event that we go even lower, the 59 to 61 and the 63 quarter are strong areas of support. Now, we have to keep in mind that the larger time frame bias is still bullish, and only our short-term bias is neutral. So as we extend into better areas of support, that larger time frame bias combined with good trade location can still provide edge to the buyers. And that's why that 66 half to 68 half area and possibly the 71 quarter, 73 quarter, although we have to be a little more careful at that 71 quarter, 73 quarter now. But 66 half, 68 half is a good spot in conjunction with that larger time frame bullish bias where buyers can be active and it can provide a nice long setup on first test. And then 59.61 seems like a bit of an extreme at this point in time. But if the volume starts rising and we start seeing a pickup in volatility, then I guess it could be technically possible, but it would be a range extreme and it is a strong area of support. So that would be the area that could cap the downside. So those were the main ideas heading into the open. So far on the smaller time frames, we've seen sell side starting to gain a little bit of dominance, but it doesn't mean that the market has to flip bearish immediately. So we are going to maintain that neutral bias, open to setups on both sides, with the idea that the larger time frame bias is still unaffected, But the market's trading at these elevated prices near the balance area high, so anyone initiating a long at these higher prices is more at risk. So let's see how ES responds to the 78 quarter to 80 half zone, trading back above it would signal buyers regaining control, and if there is momentum to go along with that, then we could still move beyond the 83 to 85 quarter. So we are going to maintain that neutral bias, see how ES responds to the zone, and we'll take it from there.